Ready to pass the CPA exam faster? Visit cpapass.ai. Today, governmental fund accounting, measurement focus, and basis for CPA FAR. State and local government accounting is a major focus on the CPA FAIR exam. Unlike private entities governed by FASB, governments follow GASP rules because their core mission is public accountability rather than earning a profit. To track this accountability, governments use fund accounting, dividing resources into self-balancing buckets. The most heavily tested of these are the 5 governmental funds, which you can easily memorize using the classic mnemonic GRASP-PP. General, special revenue, debt service, capital projects, and permanent funds. These funds operate under a unique measurement focus that looks strictly at current spendable financial resources. To master the FAR exam, you must understand the difference in core missions. FOSB focuses on profitability and economic performance for businesses. GASB focuses on public accountability and stewardship for governments. This difference dictates how the 5 governmental GRASPP funds operate. Because their purpose is to provide core public services like police, fire, and roads, they do not track long-term profitability. Instead, they use the current financial resources measurement focus. This means they only care about short-term spendable assets and liabilities. They completely ignore long-term assets and long-term liabilities. If a transaction doesn't provide or use current spendable cash, it simply does not belong on a governmental fund's balance sheet. Governments organize all activities into 3 distinct fund categories: governmental, proprietary, and fiduciary. While governmental funds use modified accrual, proprietary and fiduciary funds use full accrual accounting. Proprietary funds cover business-like activities, like a public water utility, charging fees to external users. Fiduciary funds hold assets in trust for external parties, such as employee pensions. Examiners love to test the own use misclassification trap here. Fiduciary funds can never hold assets that the government can use to support its own programs. If the government has administrative involvement or direct control over how the money is spent, it cannot be classified as a fiduciary fund. Fiduciary resources belong strictly to external parties, which is why they are completely excluded from the government-wide financial statements. Governments present financial statements at 2 distinct levels: government-wide and fund level. This creates a major reporting contrast on the exam. Government-wide statements show a consolidated, big-picture view using full accrual accounting, focusing on all economic resources. This is where you record long-term capital assets and long-term debt. Consequently, depreciation expense is only recorded at the government-wide level. In contrast, fund-level statements zoom in on specific fund categories. For the governmental Grace PP funds, we use modified accrual accounting. Because modified accrual only measures current financial resources, capital outlays are recorded immediately as expenditures, and no long-term assets or depreciation are ever recognized. Understanding this structural difference is key to passing the FAR exam. Let's walk through a practice example to highlight common examiner traps. Suppose a city builds a $10 million fire station. In the Capital Projects Fund, the entire $10 million is recorded as an expenditure, meaning 0 capital assets or depreciation appear on the fund balance sheet. However, at the government-wide level, it is capitalized and depreciated. Another major trap is the 60-day rule for revenue recognition under modified accrual. Revenue must be both measurable and available. If a city collects property taxes 80 days after year end, that portion is not considered available and must be deferred. Only the portion collected within 60 days of year end can be recognized as current period revenue. Finally, remember that fiduciary funds are completely excluded from government-wide statements because those funds hold assets belonging to external parties. When tackling government accounting on the FAIR exam, use this simple decision framework. First, identify the entity. If it is a state or local government, apply GASB rules. Second, determine the reporting level. Government-wide statements always use full accrual accounting. Third, look at the fund type. If it is a governmental GRAS-PP fund, apply modified accrual and focus strictly on current financial resources. For proprietary and fiduciary funds, use full accrual. Keep these rules straight, watch out for the 60-day rule, and practice these concepts with simulated task-based questions on cpapass.ai to guarantee exam success.